All right. I promise this will be my last talk today, right? It's my voice will be croaking effectively by the end of this. Luckily, this is only 20 minutes. I'm delivering an individual speech here. One of the keynotes. This is effectively around the evolution of liquid IP markets. And the other thing that I want to really speak about too is real-world assets and also just different operating models. So like the whole point of this is an exploration of sort of a series of first principles around market infrastructure and frameworks. Like I think we emphasize a lot of innovation around the science, but we tend to forget that some of the market frameworks are centuries old that we're effectively trying to apply to modern innovation. And in particular, the framework of intellectual property itself, which I'll talk about, it was originally developed in the late 1600s in the UK. So IP, it is a really significantly huge underutilized asset class. In the traditional finance sense, you will just see, like in the biopharma realm, you'll see licensing deals, you can see royalty spin-outs from companies in the term of contingent value rights. But what always tends to happen is that IP is held on corporate balance sheets, and it may be operationalized, it may not be. One of the great travesties of at least what we experience in biopharma is that we have these amazing technology platforms, and then investors come and tell you that you're only allowed to develop one asset on them. And so like all that technology capability effectively sits idle. So in the US, I mean here you'll just probably see the growth in intangible asset value that effectively sits on the balance sheets of all sort of the S&P companies, which is around really 90% these days. You know, there is a lot of like goodwill and brand equity that effectively sits within that, but then there is a lot of intellectual property. You see the corporate tech giants, they're the largest filer of patents across the world. Some of that is just to defensively hold patents so people don't come into competitive domains. But I think like from our perspective, it is also, it does sort of like degrade productivity and greater progress for humanity because, you know, they're sort of effectively just like not commercially progressing the intellectual property. And some of that is because they just don't have the bandwidth, the focus, and the means to actually be able to go and advance it all. So, you know, you'll see a figure there, about $1 trillion annually of underused IP is really, really failed to be leveraged. So, you know, I mean, one of our big aspirations here is to like make IP discoverable, allow people to effectively advance it, have the right sort of market funding frameworks, and then be able to create the data infrastructure effectively around that so that it can be invested into, people can effectively collaborate on it. From the pharma perspective, this is a ChatGPT figure, by the way, because I've been trying to figure this out for a long time. There's no adequate estimate of it, but you know, there's probably like 500,000 drug-like patents that are just sat idle. And so, you know, there is a business of drug hunters that sit around, people that sort of profess to know where certain types of drugs reside, how much sort of investigational evidence that sits around them. There's, you know, a handful of businesses that have made it like their corporate mission or job to go in-license these drugs and then just run a clinical trial and then resell them back to pharma. So like notably Roivant is an entity that really does it. But, you know, if you can see here on the intangible asset side, you know, there is an overall market capitalization of 61 trillion, which is, it's a pretty big figure, by the way. I mean, that is about 2.5 times the size, effectively, of US GDP. And within that, you'll see that actually scientific-based IP is the largest category as such. And so my point before, I would love to encourage the community and people to think more broadly about the application of very old frameworks and how they have not really adequately evolved for modern day science. 1624 was when the statute of monopolies was effectively developed. And so it allowed, in order for a degree of public disclosure around an invention, you got a term of statutory monopoly, which was 20 years. In 1624, there wasn't an FDA, there weren't any regulators, and life expectancy was a lot shorter. So you really did get pretty much half your effective life to commercialize and exploit an invention. And so you'll sort of see here, there's a progressive number of sort of advancements on the patent framework within the United States. 1719, 1836, and 1952. Everyone know that the core sort of like accessible element around patents is like a degree of novelty and non-obviousness. And so, you know, that these are the things that you effectively have to prove and you know, also attest to the fact that there's no prior art when you go into that patent process. Now, the biopharma industry's relationship with like the justification of patents and also associated drug pricing is sort of summed up in a thing called the biotech social contract, which Peter Klinsky from RA Capital had effectively coined. And so it's, you know, you get a period to reap the rewards of your innovation with the idea that there's an increasing degree of genericization of various drugs on the other side. So in totality, it tends to bend the curve on overall treatment cost for the general population. So on the pharma side, and this is just my evidence having been a VC and sort of sitting in industry, and I think things that people generally stand behind is a new chemical entity is like the gold standard for effectively having intellectual property. It does mean that, you know, there are a lot of businesses that try to do patent busting. And so, you know, you discover something really good, everyone sort of like, it's a gold rush, everyone sort of rushes in to find a way to either bust your patent, bring a new competitor to market, et cetera. And so what people really want to effectively do is, well, I mean, larger corporations, I should say, is, you know, they just want that period of exclusivity. It's like what Wall Street likes to see because they know that there's reliable revenue and they can do all their sort of earnings forecasting around that. There is, however, these method of use patents, and my general observation is people don't think about intellectual property regimes as much as they really should. As a matter of personal experience, you know, was really forced into it in my accidental foray into biotechnology was via the psychedelic medicine industry, and I was figuring out patentability for things like psilocybin and some of the naturally occurring compounds. But, you know, the whole idea there was that there was all this sort of observational anecdotal evidence around these being really effective for mental health disorders and people really pushing the need. The question was like, how did you put it within one of these frameworks? And so actually what you'll see in a lot of DeSci is people do a lot of drug repurposing. You have DAOs that are patient collectives. It's a very quick way to effectively treat the need of those people that sit within that patient community or effectively that DAO. And, you know, we've seen this to great effect. And by the way, it's like we're seeing organizations across the world, larger organizations, lean into this idea because they just do have a lot of patients coming in the door that like need treatment now and can't wait for, you know, a new novel therapy to effectively hit the market. Formulation changes, you know, that's interesting for, you'll see this like it's a matter of protection, particularly for like neuropsychiatry drugs, you develop patches, sublingual formulations, things of the sort, and manufacturing processes. But, you know, I mean, here, it just significantly is an underinvested part of the broader biopharma ecosystem. And by the way, actually, it's a good one for AI because you have a lot of human data. And you can use the AI to actually pass through that human data. So this feels like a little bit of a Christopher Nolan film where I'm going to like jump from the past to the future and then back to the past again and things of the sort. But Paul Kohlhaas always talks about this, the path to biosingularity and, you know, the future. And we have people here that are actually really involved in a degree of autonomous science, but I'll reflect a quote from a really well-renowned deep tech venture capitalist, Josh Wolf, who runs Lux Capital. And, you know, like he thinks that across all the things he sees, the big innovation for the future is effectively where we have AI and machines that are doing science 24/7, right? And that is being able to generate a hypothesis, be able to refine it, have that run effectively through a cloud lab, have a series of agents that will, work on patentability. They will get company structure and funding effectively set up for you. And so, it's removing effectively the friction that sort of sits within the ecosystem. Okay, so here, this is just sort of like, as I move on to talking about RWAs, one of the things really is you're talking about substantiating revenue flows from assets. But I just want to paint a picture on like how immense the market opportunity is, because like if you follow the money at the moment, what happens is larger pharma companies and developers are publicly listed entities. They work on Wall Street timetables. Wall Street timetables are you have to outbeat earnings every 3 months, and so it means that you have to have really blockbuster drugs to effectively be able to sell them through. There are short-term incentives within the health insurance industry because they're actually the customer. It's not the patient. And so the average tenure of a held life insurance policy in the United States is 3.7 years. So partly linked to the time that people spend in their jobs and what their employers will pay for them, or people self-voluntarily sort of switching out to another. So what that really inherently means is that from a development perspective, if your customer is looking at a payback period of less than 3 years, they've got to get something that keeps you in that, like the only treatment that they're financially incentivized to give you is something that keeps you paying that premium during that 3-year period. So things such as longevity, they really, really struggle with to actually put within that, even though that we know if you do the broader economic math and benefit to society, we talk about the longevity dividend, it just helps enhance the economy overall. And the other thing probably here is about the long tail of unmet medical needs. 95% of recognized diseases don't really have an effective or approved treatment. And so, we're concentrating like capital and all our resources in a select number of things. We spoke before about a lot of the Me Too efforts. Our deep commitment here is really to help enhance transformative science and those things that are like people looking to effectively break new ground. So I mean, a little bit about real-world assets and sort of the infrastructure that we're looking at is, what I was trying to do with this talk is set up the enormity of the revenue opportunity that exists by just using either some different IP strategies. The one thing I failed to mention on the previous slide is that pharma will only fund a drug if it can sell more than $1 billion a year in terms of peak sales. And so that's why you also see this thing around 95% of diseases not having an effectively an approved therapy. So what it means is that effectively the DeSci design space sits optimally below that sub-$1 billion valuation. By the way, it's if you generate $990 million of revenue a year, I think you're still a pretty good business. You're just not of the size for the near $1 trillion market cap companies. But for those that are familiar with RWAs, basically it is a theme effectively within Web3 markets and broader markets at the moment. So, I think one of the big things really has been stablecoins becoming all the talk. And so you have had the legislative support out of the United States. I'm seeing people that have been, so I've sort of been around this ecosystem for quite a while on the RWA side, and I was very, very close to one of the major stablecoin players. And what was interesting is that was a really deeply questioned market methodology and market infrastructure previously. And now there is just, I can hear people that are from the TradFi community just talking about it's evangelizing effectively the merits of it because of payments efficiency, and and I've experienced it myself on cross-border payments, and then there's a whole other range of sort of advantages that come with it. Now, the Pantera Capital sort of describes RWAs as being the replatforming of capital markets, and I think where Wall Street drives a lot of financial innovation and adoption, and for them, where they can see a new service line, P&L, and money being made is where they're going to lean into. So say, for example, BlackRock and Fidelity, and I know the team relatively well at Fidelity, they're moving towards financial instrument tokenization, a lot of their asset classes. So like starting beyond that, money market funds, get a token, you can actually use as collateral, effectively within crypto exchanges. Some of the world's largest private equity firms are now looking at tokenization of private credit funds and things of the sort. So, you know, the picture I'm trying to paint here is that this is going to be a big trend, and it's coming for all sorts of markets. Now, I sort of like bringing about a degree of financial innovation and liquidity for scientific R&D, I think is like a huge boon for industry, because the periods of illiquidity that investors have to sit on will ride through economic cycles, and that may not necessarily reconcile with like what investors want. And so, you know, just thinking about this quote here, liquidity begets value, like anything scarce will be ultimately tokenized because the benefits of digitalization, increased liquidity is so great. And this is like effectively a quote from Balaji. And, you know, I can think about a million ways in which anyone who's allocating capital into scientific projects would want to see a degree of liquidity. It's just like even, you know, like risk management, a variety of these things, being able to also adequately build portfolios, you know, like you don't want to be able to like have to go invest into Eli Lilly just because you want exposure to GLP-1s. You can actually build an IP portfolio of whatever you might think is effectively the next sort of like development trend. Now, in terms of DeSci RWAs, you know, I think at Molecule, we have spent a lot of time effectively thinking through the framework. We have had discussions with the SEC, a variety of US regulators. We've come up with structures that we think are really, really deeply supportive of moving capital into early stage scientific R&D. And so, you know, the two obvious places where we land on the RWA frameworks is so in equity, so it's effectively tokenized equity and bringing people on the cap table. But like the broader base benefit there is that you're allowing liquidity in an early stage, so it almost is like effectively an IPO of an early stage scientific project. And then the other one really is royalty or revenue streams. You know, I mean, we're doing this so products can effectively get into the market. They can have an adequate cost base that effectively patients, consumers, all that would really, really want to see, but ensuring that effectively token holders, you know, the economic benefits of what they've been able to fund and what's went into the market. And, you know, I mean, for those that are like US-centric or based, you know, we actually also have a structure that is almost a little bit like the OpenAI structure in a way where there's a not-for-profit on the front side of it. It permits, for US taxpayers, a tax deduction on the investment they make, but also getting a token that's a tradable asset, and then an ability to actually come into one of the RWAs like that. So it's almost like a, like it creates a degree of leverage and a leverage on the investment that you make. And so, you know, I think the aspiration, I hope there is that this will actually help push a lot of capital into the ecosystem. And that is something that we've actually worked with like US governmental institutions on. So to, you know, try to get that into a place of comfort. And what you'll effectively see out of Molecule and Bio is this framework starting to be deployed now. You know, I touched on this just a moment ago. I think, you know, it allows better investor choice. You know, I think about my own personal venture portfolio. I've got some pretty exciting investments. I probably made them about 9 years ago, and they're just like still sitting there. I have no idea when I'm like ever going to see the money. And so, you know, that I think one thing is like being able to manage liquidity. The other thing is that you can actually be very specific on IP, because like what tends to happen is if you look at like particularly say for example the pharma companies, it'll be just like one flagship type of IP that is really, really selling the company, and then you get all these other sorts of things and programs in with it where, I mean, you may not have an interest on it. It may be a drag for the markets because they don't have the same degree of interest within these other developmental programs. So you can get much more pure play exposure to intellectual property itself. And this is a little bit around the operating models. One of the things I've been talking to people about is really giving the people what they want and allowing, whether it be the consumers or the patients, to also help self-direct effectively what comes to market. And we always talk about these regulated pathways, thinking that they're the be-all and end-all. And and just to sort of illustrate the size of the market here. So in terms of the sale of regulated pharmaceutical products across the world, there is roughly about a little more than $700 billion of revenue that effectively flows through that. Now, the high growth vectors are actually these markets here. And so, and by the way, Asia has the largest market share within these segments, and the CAGRs are pretty significant. So, cosmeceuticals is a $70 billion market. I mean, we effectively have a cosmeceuticals DAO down there in terms of DermaDAO and, a variety of others within the ecosystem. And, it's projected to grow to almost 140 billion by 2030. And so, the reason why this has got a new degree of interest in this digital age is because people are really interested in exchanging views on products and exchanging views on health, right? And so there is a degree of virality in the way that things effectively take off. And so the restriction on marketing claims that is traditionally held with this, which is fine, by the way. And that's the setup. And I don't think you want companies who have maybe not the genuine interest of the patient in mind going out and pushing hard on the marketing around this. But your customers, your patients, whoever it might be, if they feel genuine effect and they also feel real value out of it, they should be able to talk about that a lot. The great thing about DeSci is that it brings together a lot of motivated people across communities because they want to see this degree of advancement. They want to see things get to the market a lot quicker. Dietary supplements and grass, this is general pathways, so nutraceuticals. It is a largely growing industry because you see the degree of popularity within social media and podcasts about vitamin regimes, supplement stacks, and things of the sort. And we're just building an enhanced degree of clinical evidence about how a number of these products can really support your health span and your lifespan. Yet again, around this, and it's the same proviso across all of these, no marketing claims, right? And also product liability. So if you speak to any clinician who works in the longevity functional health sector, they'll always tend to talk about the quality of the product, source of manufacturing, GMP, etc. And another place that it's effectively on the rise is, and this was actually an aspirational wish from one of the last panelists, Boyan, who's a VC, asking him what his big desire wish was for the overall ecosystem. He said he wanted to see more right to try, and actually, right to try, expanded access to medical tourism are definitely areas on the rise. So, and I'll say something about the right to try thing at the moment. So if you see some industry sectors that effectively really, really grew over the last few years, highly stigmatized. So cannabis being one, psychedelics being another. There were companies that went down the pathway of going to the FDA and getting things approved. And actually, a number of those executives exist within our ecosystem. So GW Pharma, famously for cannabinoids, they came to the market with an epilepsy product. So one of our board members is from the early GW Pharma team. And then also psychedelics. And then what happened is you saw so much demand for people wanting to get early access to these, hearing a lot about the prospective benefits. And there was a lot of medical need that existed around this. Now, I think I'm sort of starting to witness the early rise of right to try movements across various states. And you will reach a critical tipping point where it'll become a thing. If you talk about the United States, though, there is a restriction on interstate commerce, so people for more developed modalities, particularly in longevity and things like that, you've got to figure out locally based manufacturing, keeping the quality good. And also just product liability becomes a little enhanced around that. But, if there's a commercial opportunity, I see Lloyd's of London wanting to step in now, around providing degree of medical tourism insurance. And so, I think, and I also live in the Middle East too, so it's interesting. I speak with governments out there and have spoken with governments across the world. They see the economic benefit in being able to bring a new model to market because the market demand is really there. And people will travel in, they just won't come in for the treatment or the therapy. They'll come again, they'll develop relationships with clinics, they'll also spend money, effectively take a holiday. And so, that economic incentive is also very, very significant in being able to help people bring things to market. Unfortunately, at the moment, there is, a little bit of a groupthink, at least within the traditional venture community, about there being only one way forward. That only one way forward is getting effectively approval by major drug regulators and then having an established pricing with health insurers. But, we believe in a growth of a market where people are willing to pay for their health, right? They're also wanting things quicker. They're also going to be much more critical, but much more evidence-based in terms of what they want. And so, I think as part of the DeSci movement, the move to transparency and allowing people to assess what evidence effectively supports the product's prospective benefits is really going to help the overall growth of those markets. And so I think what you'll be able to see is hopefully a lot more of DeSci products effectively out in consumer hands and everyone effectively benefiting from it. But I think with that, thank you.